I stumbled onto a crypto project quietly grabbing a slice of $1 trillion opportunity, and almost no one is actually talking about it. It started with tokenized oil. Yes, actual barrels of oil on the blockchain. And it led me to a surprising discovery about Hedera, HBAR, that could actually change how we see this altcoin forever. Now, let me back up for a second, because a few days ago, I was doom scrolling through crypto news and I saw a list of projects leading the charge in real-world asset tokenization. Turning things like real estate, gold, or even oil into digital tokens. So the usual suspects popped on up, of course, right? Chainlink, Avalanche, but then I saw HBAR was on the list, Hedera Hashgraph. Now, I did a bit of a double take here. HBAR isn't exactly usually in the type of hypey headlines, right? So what was it doing among the top projects bringing real-world assets, RWAs, on-chain? Now, curiosity was officially piqued here, so I dove down the rabbit hole. And by the end of this video, you're going to see why Hedera might actually be gearing up for something big while most of the market, just isn't paying attention. And here's a spoiler. I got way more excited about HBAR after what I found out. Before we go any further though, I do need to say one thing out loud. Now this might just shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your own responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video is for entertainment and educational purposes only. Alright, so what is going on with HBAR and real-world assets? Well, to set the scene, there's a growing movement in crypto to tokenize real-world assets. Basically, this is putting things like the stocks, bonds, real estate, commodities, etc. all onto blockchains as tokens. Now, it's not just a buzzword anymore. Major players think that this could actually be pretty huge. How huge? Well, you had Boston Consulting Group estimate tokenized assets could become a $16 trillion market by 2030, with others even predicting up towards $30 trillion. So we are talking trillions, with a T, right? And right now, a handful of crypto projects are scrambling to get a lead in this race. Now, according to Santiment, a crypto analytics firm, their names like Chainlink, Hedera, Avalanche, Stellar, and IOTA are among the top projects driving this real-world asset trend. Now, Chainlink, it makes a lot of sense here. That's why I hold it in the portfolio. They provide the oracle's tech that feeds real-world data onto blockchains, right? And Avalanche, another one that I hold, and Stellar, I don't hold myself. I've heard are making some pretty solid moves in tokenization too. But Hedera being right up there, and that I found rather intriguing. So I started digging specifically into Hedera's RWA story, and the first thing that I discovered honestly kind of blew my mind. Now, earlier this month, we even covered it on the channel, by the way, Hedera became home to the world's first tokenized oil and gas fund. Yes, oil on the blockchain. So there was a company called Zonix partnered with One World Petroleum to launch an investment fund for oil wells. And instead of traditional shares or paperwork, they actually issued it as a security token on Hedera's network. Basically, they turned old school oil fund into digital tokens recorded on Hedera. So why does that really matter? Well, it's actually because it streamlines everything, right? These tokens, they represent ownership in real oil assets and loans. And every transaction or change is actually logged transparently on the ledger. So there's no slow paperwork, there's no middlemen, taking a cut for moving documents around. No. By running on Hedera's public network, the fund can settle transactions super fast with an immutable audit trail and a carbon neutral footprint to boot. Now that part is kind of crazy, right? Because we are talking about oil investments, not exactly the greenest sector, being managed on a network that is energy efficient. Ironic, right? Anyway, Hedera is known for its high throughput and low energy usage. So it kind of gives this oil fund a level of speed and environmental responsibility that you wouldn't normally get on, let's say, Ethereum's mainnet. This oil fund's tokenization on Hedera is actually a very big deal. Now, it's not a proof of concept or a kind of hypey announcement, no. It actually did happen. Now, it shows that Hedera's network isn't just theoretical for RWAs, it's actually handling real value and real assets right now, not just in theory, right? So faster transactions, automatic compliance checks, on-chain verification for everything, right? It's like turning a clunky old machine into a Tesla, right? One World Petroleum basically said, why not issue our fund on a blockchain? And Hedera was the chain that they picked. And you know what? It makes sense. Hedera has a governance council of big corporations. It's built for stability, and it has features that appeal to enterprises. Like you can enforce controls on tokens for compliance. You can freeze them if it's needed to be, and all of that. In fact, Hedera's very design emphasizes things like enterprise care about, such as security and predictable performance. There's no surprise then, is there, right, that Hedera is becoming a go-to platform for tokenizing real-world assets in sectors like energy, finance, and infrastructure. So this oil fund is just one example, streamlining a complex asset management process while meeting all of the regulatory requirements. It basically proves that Hedera can bridge traditional finance and crypto in a really practical way. So, after picking up my jaw off of the floor from the oil fund news, I kept on digging. Right, it turns out that Hedera has more happening on the real-world asset front than maybe many realize. For one, stablecoin activity on Hedera has been exploding recently. Now, according to DeFi Llama's data, the total stablecoin market cap on Hedera jumped over 54% in just 1 week. Now, that's a pretty huge surge in on-chain liquidity, right? Tens of millions of dollars worth of USDC and other stablecoins flowing into Hedera's ecosystem. So why is that so important? Well, in crypto, stablecoin inflows can signal that people are gearing up to invest or to use the network more, right? Stablecoins are basically dry powder, right? And a 50% plus jump in stablecoin supply surges, or at least it actually suggests, I should say, confidence and activity on Hedera is rising, and it's rising fast. So it's kind of like fuel being poured into the engine, and it caught a lot of analysts' attention. Now, some people are even speculating that this uptick is on-chain, at least in on-chain liquidity, combined with tokenization projects. It could set the stage for a big HBAR price move. Now, I saw community chatter about HBAR possibly breaking out of its long-held range. So right now, HBAR is in that kind of 17 cents range, right? A dip that I definitely took advantage of, by the way. And many are watching for a push towards the kind of mid-30 cent range, 37 cents to be exact, if momentum continues here. Now, I'm not saying that that's a guaranteed, because nothing is guaranteed. Remember the disclaimer from earlier. But it's interesting that people are eyeing those kind of levels. Now, essentially, the market might be starting to wake up to Hedera's growing fundamentals. And speaking of big players waking up, guess who else has noticed HBAR? Wall Street and institutional investors. No joke, Hedera is popping up in the waves of crypto ETF filings. Now, by now, you've probably heard that multiple asset managers are racing to launch crypto ETFs beyond just Bitcoin and Ethereum, right? We are talking about ETFs for altcoins, right? Well, HBAR, it's in the mix, right? In fact, by this kind of year or the end of this year, there are 6 different US ETF proposals that have mentioned or included Hedera as an asset that they want to offer. This is including filings from Grayscale, Canary Capital, Rex Osprey, and even Crane Shares. Just recently, Fidelity, yes, that Fidelity, and Canary both had Hedera ETF products show up on the DTCC website. Now, this is a step in preparing an ETF for launch, by the way. So think about that then, right? Some of the biggest names in finance are preparing vehicles for people to invest in HBAR through traditional stock markets. Now, that doesn't happen for random meme coins. I mean, I guess it's happening for Dogecoin, but outside of that, not meme coins. It happens for projects that institutions think have long-term viability and investor demand. Now, the SEC has been delaying a whole lot of these altcoin ETF decisions, HBAR included. But the point is, HBAR is on a short list of crypto that could get a regulated investment product. And that's huge for credibility. Grayscale even already operates a Hedera trust, and Canary's HBAR ETF seems nearly ready to go pending approval. Right, Bloomberg analysts have noted that Canary's filing is at the goal line, with tickers reserved and everything, just waiting for the green light. If/when an HBAR ETF actually launches, it could mark and would mark Hedera's formal entrance into mainstream markets. Now, I can only imagine what that could do. Potentially open the floodgates for new capital that wouldn't or couldn't buy HBAR on crypto exchanges, but would buy an ETF in their brokerage account. Now, it's one of those sleeping giant signals for me. The public just isn't hyped on HBAR yet, but behind the scenes, the suits are lining up to embrace it. Let's zoom out for just a moment. Hedera's story right now is one of quiet progress. While a lot of cryptos have been fighting for attention with flashy DeFi yields or NFT drops, Hedera has been courting enterprises and focusing on real-world utility. Now, the network's governed by reputable organizations, Google, IBM, Boeing, among many others that sit on its council, which gives it a very different vibe from a decentralized free-for-all chain, right? That kind of, angle or potential might be why HBAR hasn't been maybe the speculator's darling, right? It's not as maybe exciting in the short term as some meme coin that might be able to do a 10x overnight. But Hedera's strategy is starting to pay off in a concrete way. Right? Tokenized funds, enterprise stablecoin growth, institutional products on the horizon. Right? It's kind of like the tortoise in the race, slow and steady building the infrastructure for the future of finance. Now, all of this talk of connecting crypto to real stuff, it got me thinking about something that I'm personally doing to bridge the crypto world with, well, the real world, and to earn some passive income in the process. Now, I've mentioned this in previous videos, so it won't be any, at least new news to many of you guys, right? But it is interesting side story anyway. Unity, right? In my own crypto journey, I'm always on the lookout for innovative ways to earn crypto, and that doesn't really rely on hype. Things that actually provide a service or solve a problem, right? And that's how I got into Unity Nodes, which is the project that turns ordinary smartphones into a part of a decentralized telecoms network. In simple terms, Unity lets you use your phone to verify the global telecoms grid and get paid in crypto rewards. It's kind of like maybe the World Mobile Network kind of concept. But instead of internet, Unity actually focuses on making test calls through your phone to detect issues in the telecoms network. So every time that your phone makes a verification call via a Unity app, well, it's actually helping to identify if, say, a phone carrier has a problem with call routing or quality in certain areas. Now, those results get logged on-chain, the World Mobile chain to be specific, by the way, as proof, and you, the user, earn crypto for contributing. And the cool part here is that you get to choose to be paid in a different cryptocurrencies of your choice, right? This isn't some new kind of coin that no one knows. Actually, you can choose to be in any kind of major cryptocurrency of your choice here. Now, I'm going to be looking to be getting my payouts in Bitcoin, Ethereum, ADA, and XRP. Maybe even adding some HBAR to that list. Some of my favorite long-term holdings, right? Essentially, Unity takes a slice of the $2 trillion telecoms industry, and it finds a way to reward regular people for helping to improve network integrity. Now, I ended up purchasing a Unity Masternode NFT, which came with 200 licenses. Now, think of the licenses as slots for individual phones that I can connect to the network. Now, the app has not gone live just yet, but I'm all set for when it does. My plan is to start small. I'm going to hook up these 10 phones onto the network, right, to run and test the Unity app when it launches, just to see how it all works in practice. If it runs smoothly and the rewards are as solid as their website indicates, then I'm going to scale up gradually, right? Remember, I have up to 200 device slots. That basically means all these coming all from that one node. So in theory, I could eventually connect a whole ton of phones. So hello, passive income farm. But I'm also being super cautious and testing the waters with just 10 devices first. Right? I'm pretty excited because if this works, it's a way to earn extra Bitcoin, Ether, ADA, HBAR, XRP, etc. by literally just using some smartphones to make these test calls. It's kind of like mining, but instead of crunching hashes, my phone will actually be calling and checking phone networks. How cool and slightly sci-fi is that? Now, of course, you've got to do your own research, right, on Unity and anything that is like it, right? It's not financial advice or a recommendation, of course. I'm just going to put a link in the description for the Unity light paper and their rewards calculator so that you can read up on all of the details for yourself if you are interested in it. Now, I've talked about Unity in many videos already, and I know a lot of you guys are up to speed on the concept. By now, our community understands that Unity isn't a get-rich-quick scheme. It's a long-term infrastructure play, and with kind of hopeful that a nice little trickle of crypto rewards as a good perk. Now, the rewards calculator is very interesting, and for many people around the world, this could become their new 9-to-5 job, just saying. But of course, we have to test it out and take it all with a pinch of salt at this particular stage. Now, one more update on this though. I actually decided to purchase a second and third Unity node recently. Why 2 more? Well, it's because I noticed plenty of people like the idea of Unity, but they don't want to kind of shell out $5,000 for a master node up front, or they don't like the idea of having 200 phones to run this thing for them. Instead, they're thinking maybe they can run 10 or 20 phones. So with the second and third node, I have another set of 400 licenses that I'm planning to lease out to people who want to participate on a smaller scale. Essentially, you could rent a license from me to run the Unity app on your own phone and earn rewards without buying a node yourself. Now, the splits will be 90% in your favor, 10% in my favor. So 10% goes to supporting the channel and 90% of the profit obviously sits with you guys. So the Unity, or at least the smart thing is, I guess, that Unity's built a system for these licenses, for those licenses to be leasable. So by design, I can lease them to people, right? So I'm going to set up a transparent split, 90-10. It's a win-win situation. I'm going to front the cost of the node. I'm then going to lease the licenses out to people. You get 90%, I get the 10%, and happy days. For more information about this, and all the leases and stuff like that, I'm going to put a link in the description down below to our Discord and to our website, and more details will be available there. And, you know, it's worth joining the Discord server because that's where a lot of this chatter happens. And so if that's of something that is curious to you and you're curious about it, then hop into the Discord, right? Because it's a great place to ask the questions, to learn more about it, and to see if Unity or other passive income strategies make sense for you. Now, our Discord is totally free, it's educational, and it's where I and a lot of the community discuss all of these projects in a lot of detail. Now, bringing this back to Hedera and the bigger picture, part of why I trust projects like Unity or HBAR is that they're actually tackling real problems with real technology, not just memes or empty promises. Now, Hedera is addressing enterprises and infrastructural needs. Unity is addressing telecoms infrastructure. There is a theme here. There's bridging gaps, right? Now, between crypto and traditional industries, it's massive. And I think that that's where a whole lot of the long-term value will actually be created in this space. And yes, it's not as sexy as maybe a meme coin doing 100x overnight, right? But it feels sustainable. It feels like laying bricks for a foundation that could support huge things in the future. Now, let me just put on my risk manager hat for a second, because as optimistic as I am about HBAR's prospects, and I am optimistic, I mean, look at all that we just covered, right? Tokenized assets, surging on-chain metrics, institutional nods, then I always have to keep in mind that crypto is volatile and anything can happen. Now, one lesson that I've learned over the years is to always have a plan B. and then a plan C. And then, of course, plan D, E, and F, right? Because this applies to investing. It applies to security and even something as simple as the exchange that you use. Now, here's a quick personal tip. I sign up and I KYC for as many reputable exchanges as I possibly can, even the ones that I might not use that regularly. Why? Because if one exchange suddenly goes down or freezes withdrawals, then we've all seen that happen before, right? Then I want to make sure that I won't be scrambling to sign up anywhere. Now, I want to have the options at my fingertips. So for example, I have accounts on Binance, Coinbase, Bybit, LBank, Kraken, Blowfin, BitGet, and a whole bunch of others. Basically, all of the exchanges that I trust are in my roster here. So if exchange A has an outage or a maintenance during a crucial moment, then I can quickly rotate to an exchange B or exchange C to manage my trades or access my funds. I highly recommend this strategy of diversification. Now, in the description, I've put a link to my website where I list all of the exchanges that I personally use. And on that page, that web page, are all of my affiliate links, by the way, which means that if you do sign up through any of those, it supports the channel here at no extra cost to yourself. So thank you in advance. But more importantly here, they are there so that you know which platforms I consider reliable, right? So being prepared with multiple exchange accounts is like having multiple escape routes, right? Hopefully, you'll never actually need them. But in crypto, when things move fast, you don't want to be stuck because one platform had issues at the wrong time. So what's the takeaway here from my little HBAR adventure today? Well, in a nutshell, I learned that sometimes the most game-changing developments in crypto are not screaming in your face. They're actually happening quietly in the background while everyone else is glued to the latest meme coin drama. Now, Hedera was almost hiding in plain sight for me, a project that I was well aware of, but hadn't really given much thought of until lately. And it kind of turns out that they've actually been very hard at work, bringing real assets onto the blockchain, attracting some serious partners, and setting a stage for a potential breakout. Now, seeing an oil fund launch on Hedera, stablecoin usage spikes, and ETFs all lining up, it kind of reframed HBAR in my mind from just another altcoin to something more akin to critical infrastructure for the future of tokenization. It feels like Hedera is positioning itself as a bridge between traditional finance and crypto, and that's a pretty powerful position if you can pull it off. Will HBAR's price reflect all of this overnight? Probably not, right? These things, they take time to permeate into wider kind of market consciousness. But, personally, I'm going to be keeping a closer eye on Hedera from now on. And yes, I've been stacking a bit more on these recent dips. I couldn't resist myself. Right, the next time that someone dismisses HBAR as just boring, I'm going to remind them that boring is sometimes where the real building actually happens. In the end, this whole journey was a bit of a reminder for me, and hopefully for you guys too, that doing a little bit of extra research can uncover absolute gems of insight. Now, I went looking for the truth behind some RWA tokenization buzz, and I ended up even more bullish on HBAR than I ever have been before. Whether it's Hedera transforming assets, Unity transforming phones, or other projects quietly making some waves in the space, right? The crypto space is full of these under-the-radar stories, and uncovering them kind of feels like a mini adventure every single time. So if you've enjoyed coming along on this little deep dive with me, you can hit that like button and the subscribe button and join our community here. I've got plenty more stories and discoveries to share with you, and I'd love for you all to be a part of it. So thanks for watching, and I will catch you all in the next one.